Well, today looks like it's not going to be a good day at all. The GIFT Nifty is suggesting a steep fall. Global markets are under pressure. Our own markets are still reeling post the budget, and there's been large selling from FIs for the second straight day. Added to all of that, earnings have not been that impressive. Let's get our entire research team to tell us more about that. Abhishek is joining in first up to tell us about Axis Bank. Abhishek, over to you.
Well, Sonia, it was operationally a weak quarter, as well as the fact that stress have increased for Axis Bank. So deposits are up 12.8% YOY, and they have declined by 0.6% sequentially. YOY, it's the weakest growth that you are seeing in last 6 quarters, and sequentially, it's the weakest growth that you are seeing in last 4 quarters. Advances growth was 14.2% YOY and about 1.6% sequentially. YOY, it's the weakest growth in last 8 quarters, and sequentially as well, it's the weakest growth that you are seeing in last 8 quarters. Slippages have increased to 4,793 crore versus 3,471 crore in the previous quarter. Analysts were pegging a slippage of 4,000 to 4,500 crore, and this is on the higher side. So the annualized slippage ratio is at 6-quarter high, while the annualized credit cost is at 12-quarter high of 1%. Management has guided that credit cost will increase going ahead. With reference to the P&L, both the ANA and PAT is ahead of our poll. Back to you.
Okay, thanks for that, Abhishek. Well, let's hop across to Vivek, who's here to tell us about Big Boy L&T. Vivek?
Well, good morning. L&T, no negative surprises. That's the good part. Q1, when you're looking at the domestic part of the business, execution was hampered by election, the heat wave, and also labor shortages. And also the domestic order group book grew just around 1%, slightly better than analyst expectations, who were actually anticipating a decline. Now, talking about the international order book as well as execution, both quite strong over there. Now, talking about the numbers itself, revenues higher by almost, revenues coming in higher than the CNBC-TV18 poll, coming in at around the 55,120 crore mark. EBITDA, coming in at 5,600 crore versus our poll of 5,480. When you're talking about the profitability, slightly below our estimates. Console order inflows up 8.3% on a year-on-year basis. That is the good part. Remember, this is against a guidance of 10% for the full year. Now, also when you're talking about the core business margins, came in at 7.6%. Full year guidance is 8.25. The management, yesterday in the conference call indicated that they're sticking to the guidance for this point of time. One negative surprise that has come in is that the order prospect pipeline has dipped almost 10% on a year-on-year basis. That's the slight negative as a key takeaway.
All right, Vivek, thank you very much for that. SBI Life also reported numbers. Yash has got details. Yash, good, bad, ugly?
Well, Prashant, for SBI Life, it was a mixed bag, and even though it was a mixed bag, I'm going with a mild red on SBI Life. Most of the numbers, as far as the Q1 quarter is concerned, came in line with CNBC TV18 estimates. But the disappointment came as far as the margin front is concerned. On the margin front, of course, the estimates were anyway lower on a year-on-year basis. But the final number came even 100 basis points lower than our estimates and about 200 basis points lower on a year-on-year comparison. Now, the problem with the industry has been that the ULIP portfolio has grown very fast, which has negatively impacted margins for the industry. But for SBI Life, there was an additional problem again that came from the point of, term insurance or protection not taking off, which negatively impacted the margins for the company this time around.
Okay, all right. Thanks a lot for that, Yash. Well, I'm looking at JSPL, and actually the numbers, if you look at it, were better than what the street was working with. A couple of reasons. The standalone volumes were better, and the cost reduction continues. So let's run you through the numbers. The EBITDA number, much better, close to 200 crores better than what we were working with. Margins as well, a little bit better. It was a top-down beat, actually, because the standalone volumes came in at close to around 2.09 million tons. Most on the street were in the vicinity of around 1.9 to around 2 million tons. So India operations, better volumes out there, and that's one of the best quarterly volumes you've seen in a while. The standalone EBITDA per ton as well improved by more than 500 rupees on a sequential basis, so the street likes that. And the subsidiaries, exit the standalone business out there, the profitability improved, which explains why the EBITDA number was much better. They've reduced their net debt as well a little bit on a sequential basis, and they say they're on course to go ahead and expand capacity. Going with green because the EBITDA number looked much better, though the stock ended yesterday at the high point of the day. It's corrected close to 10% in the last 1 month or so.
Okay, so that is on JSPL. But what about IEX? How did that shape up? Vivek is here to tell us more about that. Vivek, over to you.
Well, good morning. IEX, a strong operational quarter, largely along expected lines. Remember, the company had given the Q1 operational update as well. So revenues higher by almost 19% on a year-on-year basis, coming close to the 124 crore mark. EBITDA higher by 22%, coming in close to the 100 crore mark. Margins quite strong, 80.4%, higher by 200 basis points year on year. Profitability also higher by 27.2%. The other income component this time around remained strong, so 30.9 crore versus 23.4 crore that the company came in. Q1 total volumes that the company had indicated earlier up 21.1%, and the day ahead market price was something at 5.3 rupees a unit against 5.2 rupees a unit. This is despite the fact that there was increased sell side liquidity, indicating that demand remained quite strong in Q1.
All right, Vivek, thank you once again for that. IGL is the next one we want to focus on. Sonal has got details. Sonal.
Well, IGL has reported a good set of numbers. It was the margin beat that the street would like. Revenues declined 2%, but EBITDA was up 11%. Margins expanded 200 basis points. This is at the time when gas costs had gone higher. Profits also accordingly up 4.5%. Volumes largely in line with estimates, up 5.3% on a YY basis. EBITDA per unit came in at 7.4 rupees versus an estimate of 6.8 rupees per SCM. And if we map it on the trajectory as well, last 3 quarters have continuously seen an improvement in margins. So going with green, and we'll get more color on the commentary as well when we speak to the management today. Okay, thanks a lot for that. So that is on IGL. But let's also talk about Sona BLW, because that company reported a very good set of numbers. And if you look at it, revenues were up almost 22%, very strong. They're led largely by the battery electric vehicle segment, which is the BEV segment. They've been large contributors to the BEV segment globally as well as in India, and that has helped them with their earnings. The EBITDA growth has also been very strong, 23% over there. Margins have been inching up quarter after quarter, now sitting at almost 28% margins, and the net profits have gone up almost about 27%. As I said, the electric vehicle segment is the main contributor for Sona BLW. So the BEV revenue growth came in at 53%, and the net order book for them now is at 23,300 crores, out of which 80% of the orders now have come from the electric vehicle segment. So that's the kind of traction that they're seeing over there. I'm going with green on that stock. But RBL Bank is also on our radar. Abhishek is here to tell us why. Abhishek, over to you.
Well, Sonia, sources do tell us that there is a block which has been launched at RBL Bank, and this is a huge block. So Bearing PE will sell their entire stake in the bank. They have about 7.9% stake in the bank, and the offer price is about 226 per share, which is at a discount of 5% to yesterday's closing price. The offer size is about 1,081 crore, which forms about 7.9% in terms of equity stake that they have in the company. IIFL Securities is the sole BRLM or book running lead manager to this issue. Back to you.
Okay, thanks for that, Abhishek. We'll keep an eye out for that large trade. Let's hop across to Vamakshi, who's tracking a couple of more numbers from the broader markets. Morning, Vamakshi.
Well, good morning, Nigel. Hitachi Energy reported a rather weak set of numbers. Revenue did see an uptick of almost 28%, but it came in nearly 21% lower as compared to street expectations. Even on a sequential basis, revenue has seen a bit of a dip, and that is mainly on account of cyclicality as well as higher traditional products in the revenue mix. But the operational performance, that was very, very weak for this company. In fact, that was much weaker than expected due to seasonality and this business mix. The EBITDA came in nearly 42% higher, but it was a 74% miss as compared to the street expectations. The margins too have seen a very sharp contraction on a sequential basis, much lower than what the street was expecting as well. Net profit, even though came in nearly 332% higher, was nearly 89% lower. So overall, going with the red for Hitachi Energy. But apart from that, when we look at JK Paper, the revenue from operations has gone up by almost 8.2%, and this is because the company increased sales volumes, which was largely driven by higher utilization in packaging and board business. Results were, however, adversely impacted due to significant drop in market prices coupled with surge in wood cost. EBITDA margins sharply contracted to 16.3%, and the net profit was down nearly 55%. So going with the red for JK Paper as well.
All right. Vamakshi, thank you very much for that. So it's a full earnings deck, and you'll hear from many of the companies that we sort of laid out numbers for here over the next 2 hours or so. We'll take a break. Deepan Mehta of Elixir Equities is going to be with us on the other side with some fundamental stock talk. Stay tuned.